All right, I'm just letting everyone enter the room. Thank you, guys. Good to see some familiar names here. Fantastic. All right. So, welcome everybody. Thank you very much for taking the time out of your day, evening, or afternoon from wherever you're based in the world. On behalf of me and FP Markets, just thank you very much. And I sincerely hope you're able to take something from this presentation. By way of an introduction, my name's Aaron Hill, and I'm the market analyst with FP Markets. And I've been involved in the markets for more than 12 years now. So I've also received the CMT designation. This was this year. This year. So yes, for anyone interested in technical analysis, I would wholeheartedly recommend this program. So the title of this webinar is How to Manage the Emotions of Trading. This is a huge subject. So here we'll be nosediving into the fascinating for me world of trading psychology, looking at primarily how we think when we trade, and ultimately how the things we can do to achieve a trader's mindset. There will be an opportunity for questions or a discussion at the end, and I do welcome questions during the presentation, as long as it relates to the slide we are currently working with. Now, just to be clear, I'm not a psychologist. I have no training in that field whatsoever. All I have is my experiences in the markets, and those experiences I have recorded of my mentor and those that actually trade for a living, whether that be part-time or full-time. Obviously, examining all of the psychological influences that really affect trading would be impossible in such a short presentation. And to be honest, there are likely effects that I am personally unaware of. So what I did is I dug deep to present the most crucial, at least in my view, the most crucial for us traders. Now, just to round off the introduction, there will be a recording of this presentation available, and this will be through the usual routes, either through the main FP Markets website, and you can find that under resources on the main webpage, or alternatively head over to our YouTube channel and just look for FP Markets, and you'll find all of the archived webinars available for you. As you can see in the chat box now, we have the links for both YouTube and our main website. As usual, let me just quickly run through this part of this disclaimer. So the information contained in this material is intended for general advice only. It does not take into account your investment objectives, financial situation, or particular needs. FP Markets has made every effort to ensure the accuracy of the information as at the date of publication. So, simply put, what I say, show, or even question here is solely educational, and it does not represent investment advice. All right, how long should it take to attain a level of consistency? Now, if I had £1 for every time someone asked me this question, I would no longer need to work, I would no longer need to trade, and I would be a multi-millionaire. Well, it's a little bit exaggerated, but I think you get the gist. So how long should it take to attain a level of consistency? Now, I wish I could say I attained consistency after a year of trading, even 2 years of trading, or even 3 years of trading. It took me around 8 years before I attained any form of consistency that I was personally satisfied with. It was 6 years before I even realized that it was not my knowledge that was the issue. Like most of us here, I assume we've all dissected the RSI, we've dissected stochastics, we've looked at support and resistance, we've looked at the AB equals CDs out of the harmonic strategies. This was not my issue. It was my mindset. And the worst part about this was my mentor continually asked me to study about mindset. And I just really believed that if I had my trading strategy in hand and it had an edge, I would be okay and I would make money. It just really wasn't the case. And I found that out the hard way, hence why it took so long for me to attain to reach a level that I was really, really happy with. So knowing this, we can start to see why it can take such a long time to generate a form of consistency, with many actually throwing in the towel just before they reach that level of consistency because they're missing that important emotional component of trading. And there is a strong emotional component with trading. And really, I think it all begins with expectations. And so with that, just bear with me, guys. Sorry about this. So at first, most of us believed trading was this. And, I really do hope none of us still believe trading is like this. I initially believed I would be like this gentleman here with a laptop and money literally raining down on me on the beach. But as you can see here, most of us desperately want to leave the 9-to-5 hamster wheel job. We generally come into trading with skewed expectations. We feel that trading is easy. You cannot imagine the number of times that I've encountered new traders enter this industry and tell me this is easy. It's almost to the point now that it makes me cringe when I hear this word. And I used to react. I used to respond to this, but now I don't even bother because I know what's going to happen when you enter this industry with skewed expectations. I mean, I understand why they're thinking like this. I mean, how hard can it be? We either buy, we either sell, or we trade flat. There's three options. Buy or sell is largely the main options for us, right? But we neglect the fact that we could potentially lose money and lose all of our money. And we focus on how much we could make. We also focus on I certainly did, and I know many others did. We also focus on things like how it could change our lifestyle, how earning so much money could change, how impressed our family and friends will be when we pull up in that sports car, working only a couple of hours a day. If there is anyone new viewing this presentation today, while you can generate a good standard of living for yourself in trading, it is not an easy path to riches. The path to consistency is, for me, it certainly was frustrating and extremely stressful. I guess you can say that you can say this about anything that is worthwhile pursuing. And if it was that easy, everybody would be doing it. So is it worth it? Is it worth all of the stress? Is it worth all of the frustration? I truly feel it is. Some consistent traders that I've interviewed over the years actually disagreed, as it led to a life of loneliness. I understand this, as you are trading from your home office, generally trading from your home office, with no one but the screens and the market to talk to. This is why you see so many good traders. This is why you see good traders, and they're very difficult to find, by the way, set up workshops to not only help interact with fellow traders, but also, as you can imagine, create another income stream. So my point really is let's get our expectations in line so we do not end up like this poor chap sitting here, wondering where it all went wrong, as we did not first prepare ourselves for the challenge ahead. Trading is not going to be a weekend course, guys. You are not going to visit a guru's workshop for 2 days and exit there with enough knowledge to trade the markets consistently. I do not care who says this. It's untrue. I've not met anyone that's attained a level of consistency in the markets, but has credited their success to a weekend course. Let's understand that in order to achieve consistency, there is work to be done, a lot of work. You have to embrace this, look forward to it, and you will eventually reach a level so few fail to reach. So other than expectations, we can, what other ways can we end up in this position here? Are successful traders just more intelligent than the majority of other traders? I truly believe this is a resounding no. Otherwise, the many doctors, the many lawyers, the many engineers who attempt to, shall we say, conquer trading would succeed, and they don't. They struggle just as much as I have to be careful here, the normal folk struggle. So I firmly believe, although we all need to still learn technical analysis and fundamental analysis, I firmly believe it is how we think, our trading mindset, and this is the main theme of this presentation. So what is a trader's mindset? Again, this is just my opinion over the years that I've picked up. So a trader's mindset is someone who is a dedicated professional, someone who is disciplined, someone who is focused, has a relatively small ego, especially with the markets, has no fear of losing. We cannot remove fear, which I will get to very shortly, but someone that's learned to control their fears and has a detachment to the money. Very important. I know you're probably thinking, is this even possible? I truly believe, I know it is, of course it is, but it takes work. Acquiring a trader's mindset is a learned skill. It's a skill. It's a skill as much as learning trendline support. It's a skill as much as learning support and resistance. Unfortunately, there is no blue pill that you can take and magically transform into a trader, however much we want that to be the case. When you're trading with live funds, I found that it really was such a good way of showing my strengths and my weaknesses, and they showed it very well. It will bring out your flaws. Once you start trading with live money and you start seeing that profit and loss increasing and decreasing, fluctuating, sorry, your flaws will show. And these flaws are something that I found that we've learned to hide so well in society, if that makes sense. So to acquire a trader's mindset, we have to change a few things. The question is, how can we develop a trader's mindset and learn to control our emotions when trading? Fear. Now, we all know what this means. We all experience fear. And this is one of the primary factors behind failure in this business. We are a fearful species. I'm so sorry, guys. We are a fearful species, whether we like it or not. Now, if there are any psychologists present, please correct me if I'm wrong, as this is only through my own research and the years that I've been looking at the charts and trading with live funds and things like that. And what's really made sense to me as far as my trading. So your amygdala, I think that's how you pronounce it. An area in your brain that helps you take in and respond to emotions. And so what happens is it immediately presses the panic button when a fearful situation erupts. It's an incredibly powerful emotion. I don't need to tell you this. A primitive one that your brain and body rely on to maintain your safety, right? So in response to fear, your brain releases a biological response, right? That can increase your heart rate. It can increase your blood pressure. It can cause sweating. It can cause your pupils to dilate. A number of things. So look, anyway, I think about it like this. There are three types of traders. There are the consistent winners, there are the consistent losers, and there are what's known as boom and busters. I'm sure you've heard of these sayings. Most, unfortunately, fall in the category of consistent losers and the boom and busters. The tendency is to make money, lose money, make money, lose money, until we can continue trading no longer. Our account reaches our risk of ruin value, and we just really cannot take it anymore. And the funds have depleted so far that we cannot continue. Those who have, say, attained a level of consistency and fall into the bucket of consistent winners. We do have a question, just bear with me. Thank you, Mark. Right, Mark, can you just copy and paste that into the chat box? He's talking about the amygdala more in a little bit more detail. If you can just copy and paste that into the chat box, that would be fantastic so we can all see. All right, so where was I? So look, fear is very powerful and can make us really hesitant to trade. I'm sure we've all felt that. It can drive us to make poor decisions. Fear can also override the ability to think rationally. And ladies and gentlemen, we must be able to think rationally and objectively to trade successfully. I have even heard of traders at the very thought of taking another trade, and it makes them feel nauseous at even the sight of a chart. So it can take a long time for us to become accustomed to fear in trading. On a physical level, we enter what's known as, this is how I see things, guys. Please feel free to correct me. On a physical level, I believe we enter a fight or flight mode when we trade. Why this occurs is still very difficult for me to understand. All I can put it down to is our brain thinking that the possibility of a losing trade is a threatening situation. Can fear, as you can see on the slide here, can fear be removed? For me, it's a resounding no. I've yet to meet anyone that has completely removed their emotions in trading. It's just impossible. Unless we're a robot, it's impossible. But we can learn to control our response to emotions felt while trading. So, thank you. We've just copied and pasted that message from Mark in the chat box, guys. So how can we learn to control fear when trading? Let me just say this, that it does not matter if you have a superior trading strategy that has in your backtest provided a defined edge in the markets. So it has proven to have positive expectancy. If you cannot handle the fear of trading with real money, it will not help. Okay, that is something that's widely accepted by many consistently profitable traders. So as far as I know, there is no easy way to overcome, as you can see on the slide here, the next bullet point, there is no easy way to overcome fear. And this is really why I believe so many take so long to reach a level of consistency. The only way I've found is through a technique known as systematic desensitization. I believe this relates to exposure therapy. So if you're just an example, let me think of one. Spiders. If you're afraid of spiders, the way to fix this fear or lessen the effects is to be around spiders more often. It's easier said than done. I do appreciate that, but this can obviously be done slowly and through time. So your fear should eventually lessen the more you expose yourself to that fear. This is the only way I know and the only way I use. So it's essentially repetitive exposure to what you fear. And we have fear when we trade, and many of us do have fears when we trade. So the technique I will leave you is what my mentor taught me so many moons ago, and that is to become accustomed to risk and by extension, the fear of this risk in trading. Now, I have to be quite clear with you guys. I did not follow this when I first started, when he first introduced this to me. I chose to ignore it because, like so many of us, I thought that the trading strategy was more important than the actual trading mindset. More for me, really, because it cost me many, many years of frustration. So quite simply, I began with a demo account. This is how he really, really opened my eyes to how we have to approach this business. I began with a demo account. I also used the FX tester to backtest strategies. Now, this provided me with something very, very important that elevated my confidence and to move into a live trading environment. It gave me statistics. It gave me statistics of the strategies I'm using. So from there, with these statistics, would it have been wise for me to jump headfirst into a large account, a live account, and begin risking an uncomfortable amount? I'm sure you'll agree. The answer to this is no. This defeats the object of exposing yourself, exposing myself to, slowly to the risk and the fear of trading. So what I did was, following my demo account, following my FX tester backtest, I then moved on to a small live account. I actually started with 500 UK pounds and I risked 1%, so which is five pounds. You see what I was doing here? I did not rush in. Like so many of us, we rush in and we expect to make a living from £1,000, £1,000 account. It's just not going to happen, guys. So I did not rush. I took it slow, and I knew I had to familiarize myself with the risk I am trading, even if that was just £5. And if I was able to grow my account over the next quarter, then I would feel comfortable increasing my account size and consequently my risk. The key word there is comfortable. Once I'm comfortable with that risk parameter, I then move on. So the next question is, how much should you increase your account by? Well, this will be trader dependent, really. So we are all different. For me, the next step was 1,000 UK pounds and then risking another 1%, which is £10. Once I traded that consistently and comfortably, the next step was 3,000 for me, £30 of risk. So I ask you to be honest with me. How many of us here have actually followed through and done this? How many of you have heard of this technique? How many of you are in the process of doing this? You are free to let me know in the chat box. As I really have found this is the only way that I was able to increase my confidence and help reduce the fear of trading. So I will leave you with this on this slide. Try your best to always keep the long-term goal in mind, which is longevity and a healthy respect for risk. Now, guys, you are free to let me know if you've done something similar to this in the chat box. Please do go ahead and let me know, and we can have a discussion about it. Next slide. All right, so this is an interesting one: fearful and hopeful. So I'm going to touch on something I believe that is similar to, I'm sure we've all heard of this, similar to one of Warren Buffett's famous quotes: be fearful when others are greedy and greedy when others are fearful. For me, I am relating this to trading, in particular my entry and my exit. And it may open your eyes to a different way of looking at things. Now, this is a recent pound-dollar chart, the H1 timeframe. So let's imagine we enter short from this trend line. Let me just get the pen up. That might be easier. Let's imagine we enter short from this trend line resistance. Now, this is a clear trend line resistance from 2 points of contact. So we have 2 points of contact here. And this is the third point where we took our short. And as you can see, that's our entry. This was a to the pip entry, guys. We don't often get those, but here it was. It was a fantastic trade. So, and we placed our stop above this area or this decision point. So this was a clear decision point for me, as it had a strong momentum to the downside and had another reaction here. So this was an ideal area for me to place my stop above. So the protective stop loss order is at 21.49, and I placed the initial take profit target at 20.70, and this was a clear area of support. Okay. Now, ignoring the fact that price did actually go in our favor, let's remove all of these drawings here. Now, ignoring the fact that price did actually move in our favor, let's imagine that price turned against us. All right. Many will become. So what happened? Price actually turned against us and started exploring territory above this trend line resistance. Many will become, many in this set. This is through talking to other newer traders and those with less experience. Many have said they become hopeful that price will come back to their break-even entry to give them a break-even trade. So their risk is at break-even at that point. But what I've trained myself to do is become fearful at this point here. Now, this may seem strange. Why are some of us hopeful in a losing trade? Ask yourself that question. Why are some of us hopeful at this point here? Well, I found that some traders let their losing trades run because they're hoping so much that price returns to break even. I am sure each of us here present today are guilty of this. In fact, I know 99% of us here are guilty of this. At least once in our career. So I think why traders are hopeful at these points here in negative territory. So we clearly hope the trade will turn around and become profitable. I get this, and it's a normal, and it is normal, I would think. But there is another reason, and that is to circumvent pain. Our brains are hardwired to avoid and escape pain. It's there to help us survive, signaling an imminent threat, right? This is how our brain works, that we need to evade. So this is a threat. So the price jumping above our entry into negative territory is a threat, is our brain telling us we are in a threatening situation. And we are experiencing pain, so emotional pain. And our brain looks for ways to evade this pain and to put an end to this discomfort. So we begin hoping that price will reach our break-even entry or even move into profitable territory. So avoiding pain. Our brains are looking for ways to avoid this uncomfortable situation at this point here. This is the same, you can think about this as the same as when we take profits early. Again, we cannot bear to lose the unrealized gains that we've spent the last 2 hours, the last 2 days watching. So we take profits to end that pain. You could give any reason you like for this. A good one is saying you cannot go broke taking a profit. That should be erased from trading literature for good, as you can certainly go broke taking a profit. So with a losing trade, there is nothing to hope for at this point. There is no hope at this point. There is nothing to hope for. My fear, I become fearful at this point. I do not become hopeful that price is going to turn back, because I set my stop loss at this point for a reason. This is where I know my trade no longer has any relevance, and I want to be out of the market. My fear is that price will jump above my stop loss. Okay, jump above my stop loss. That's the only fear I have at this point. Nothing more. I'm fearful at this point. I'm not hopeful. So my fear, as I said, my fear is that price jumps above the stop. Okay, and the reason why I do not think about this as being hopeful is because I set this stop here when I was objective, when I was unemotional. I had no emotion to the trade. So I entered here. So I set my limit sell at this point. I set my protective stop loss order at this point. I am completely unemotional. I'm not yet in the market. So when price is trading at this point, I've set my entry there. I've set my protective stop. I'm completely unemotional. I'm completely objective. So why, when the emotions are running high, would I think that it's a good idea to either move my stop, maybe above this high, maybe above this high, or even, God forbid, above this high? Why would I think that that's a good idea? At the time, you think it's a good idea because your brain, you're functioning on emotion at this point. So I was in complete alignment with my trades, with my trading strategy, my strategy's rules. When I set this entry, when I set this stop, that was in complete alignment with my rules. So again, why would I change this when or if the trade goes against me at this point? Why? There's only one reason I know, and that's evading pain. Now, as you can see, price did indeed move in our favor. So let's turn this a little bit more positively. So price did move in our favor. So once this candle emerges, what generally happens? What would you be thinking? If you shorted at this point here, with your stop here, what would you be thinking? What emotions would be going through your head? So for me, I become hopeful. I become hopeful in that price should continue. And with that, I look to try and pyramid my position. What I mean by that is I look to add to my position. Where do I look to add to my position? Well, I look to my trading strategy. I look for a break. So just as an example, I look for a break below this support because this is clear support, guys. This is clear intraday local support. I look for a break and a retest of this level and a potential continuation lower. So if I see price break below here and retest the underside of this, this is when I will look to add to my position. I am no longer, but what happens is traders become fearful. Sorry, I've lost what I was going to say. So what happens is traders become fearful at this point that price will come back and take them and again, test their entry level. This is not the way that most professional traders think, that I've found especially. So when price reaches our predetermined take profit level, notice I've said initial take profit level. So when price reaches our predetermined TP, what do many of us do? Some will be grateful to be out of the position through fear of losing their gains. As I just said, through fear of losing their gains. But others will want to continue trailing their position and even pyramiding the position. Now, this is the key point that I really, really wanted to drive home with this chart here. You must stick to your trading plan. If it is to trail, if it is to add to your positions, if it is to average into a position, if it is to or average out of a position, then stick to it. This is why I never, ever understand when someone tells me your winners will take care of themselves. Another phrase, another sentence that should be removed from trading literature, I feel, because they don't. For us independent traders, we still have to maintain and monitor the favorable position, right? It doesn't just take care of itself. We still have to confront fear, hope, and fear. So the point I really want to end with this slide here, with this small situation here, is try to think clearly when you are in a trade and understand that you might want to switch from being hopeful to fearful in a losing trade and from fearful to hopeful in a winning position. Now, before I clear these drawings, I just want to check. All right, so I'm just reading out a question here. Just bear with me. So a question from Mark. My main issue is how do I trust the position I am going to take on a specific stock when all indicators show it's a good entry? The first thing that comes to my head is you should already have trust in your system before you trade live. I assume that's what you're referring to, trading live. And how do you gain that trust? You cannot just click your fingers and automatically have that trust. It's through hard work and back testing. Once you have the backtest underway, and then you build slowly. You build very slowly. As I said earlier in this presentation, you build slowly and you learn to trust the strategy and let it prove itself. If you don't have that issue where you don't trust the position, where you may not trust the position, will always be there, in my opinion. If anyone else knows any other way of doing this, please do let me know. And I'll happily look into that, because I'm always open to learning. You're very welcome, Angelo. Very welcome. Thank you very much for your kind comments. All right, so let me just clear these drawings and remove this. So this is the point you must understand, that we have zero, and I have capitalized zero for a reason, zero control over the next trade. This might help you, Mark, as well with this question. You have zero control over the next trade. And ladies and gentlemen, just to be clear, I have met a lot of brilliant traders, and all of them have reaffirmed this point, to which I wholeheartedly agree. No one knows what will happen on a trade-by-trade basis. This is a crucial point. Many traders unfortunately, they merely pay lip service to, but they do not truly accept that they have absolutely no control over the next trade's outcome. If you do, you should not panic if the trade turns against you, right? So look, the trade's outcome will be one of three things. As you can see here, it will either be a win, it will either be a loss, or it will either be a scratch trade or a break-even trade. The loss should be contained with risk management. What I'm talking about is a stop. So, as you can see on the slide, trading is not about winning or losing. How many times have we heard this? But it is so, so true. If I could leave you with a couple of things from this presentation, it is to backtest and gather your statistics. Understand that you have zero control over your next trade, and trading is not about winning or losing. Winning and losing I will touch on very shortly after this slide. I just wanted to really extend our knowledge regarding control. So it may seem a bit counterintuitive at first, but to be truly in control of your trading and trading mindset, you must first learn to lose the need to control the market. We cannot control the market, okay? And we believe, and some of us believe we can, even though we may not be aware that we are actually doing that. The only things I know, personally, the only things I know that we can control are, as you can see, your entry and exit, your risk management and money management, your mindset, guys, very important, and your trading plan. These are the four things that I know we can control. The rest is really down to the market that we do not have control over. All right, so winning and losing. Why do we focus so much on winning and losing in trading? Guys, this is a question to you. Why do we focus so much on winning and losing? If you want to put in your place your comments in the chat box, please go ahead. I'm very interested to know what your opinion is. So as humans, for me, most dislike losing money. And if you top this off with being wrong in a trade, it's easy to see how this can turn traders into what's known as, I'm sure you've heard of this, revenge traders. We want revenge on the market. We've not only been proven wrong, we've lost money as well. We're angry. We want our money back, and we want to feel better again. And we're trying to avoid this pain again. We're trying to avoid this pain of realizing we're quite simply wrong and we've lost money on a trade. As traders, we need to not only accept that winning and losing is part of this business, but we also need to firmly, resolutely, and unquestionably accept it as fact and not just pay lip service to the idea. So the next time you put a trade on, assuming you have a back test, assuming you have an edge, understand that the next trade you take, there's a 50-50 chance that it may or may not work out. As long as you've controlled risk, who cares? This may sound harsh, this may seem a bit direct, but who cares? I know it's impressive to see a nice winning trade. I understand that. I've been there. I like to show cool charts where I entered to the pip and took profit at the right area, but it's not necessary to be a success in this business. So how can we start to do this? How can we start to accept that winning and losing is part of the business? Again, guys, I'm going right back to the back test. The back test is a good start. It's almost the foundation of your trading journey. This will provide the stats required to give you the confidence to continue trading after 1, 2, 3, or even 4 consecutive losses. As I promise you guys, this will happen to you. You will experience some consecutive losses. I do not care how good you think you are. I do not care about the guru on YouTube quoting 95% win ratio. I do not care about any of that. I guarantee you, if you look to their records, there will be consecutive losses. There is no denying that. But the key is we need to accept that. And the way we accept that is to have a good back test, is to have a good collection, a good sample of trades that we're comfortable with and we're in the live market. So we already know we cannot put any emphasis on one individual trade. So if we know that, and we know that as long as risk is controlled, then why are we concerned about winning and losing? If we know through our back test that we have an edge, what is the point? If you can tell me. All right, so I have a comment here from Angelo. I hope it's okay that I read this out. I tell you my experience. My problem is control over emotions. Many times I saw the right movement, but I exit from fear. And afterwards, the trade would have ended with lots of gains. Angelo, I feel your pain. And I emphasize the word pain there because the reason you exited was because you're trying to avoid pain. Look, this is not a directed to you. This is directed to all of us because we've all been there. We all know this. And Angelo also mentions that trading is 100% psychological management of yourself and emotions. I wouldn't say it's 100%, but it's a huge part of trading and one that's so crucially overlooked, and one that we all need to understand that is needed to succeed in this market. As I said before, you could have the best trading strategy. You could have a fantastic win ratio. You could have a fantastic reward to risk. But if you do not have control over that thing between your ears, you're going to have issues. All right. So I thought a nice way to wrap up this presentation was to offer some more positive. I believe this presentation has been rather positive in the sense that I've really highlighted some points that really affected me as I was as I continue to go along my trading journey. So some trading affirmations by those far, far greater than myself. And you are likely to recognize some of these traders. So the goal of a successful trader is to make the best trades. Money is secondary. I found that really powerful because money is the primary goal for many of us, right? But the goal of a successful trader is to make the best trades. If we make the best trades, if we follow our plan, money will indeed follow. I truly believe that. And that's Alexander Elder. Alexander Elder is a professional trader. Look, I only read books from traders. I don't read books from journalists. I do not read books from those that have not actually traded in the markets before. I always look for those that have traded, and the ones here all on this screen have traded as far as I'm aware. So Alexander Elder is a professional trader, and is also a teacher. And do check out one of his books. His book was The New Trading for a Living, I believe. Check that out. It's a really good read. The next one, trading. Look, Mark Douglas is my personal favorite. The late Mark Douglas, my personal favorite. Anyone that's interested in extending their understanding of psychology, Mark Douglas is the one I would always recommend. He has a fantastic book on trading in the zone called Trading in the Zone. So his quote, trading is not about being right or wrong. It's a probability game. Now, this really extends to what I said. It's not about winning or losing, guys. It's a probability game. And what he means is the probability comes from your back test, comes from your statistics. If you know your trading strategy has a 50-50 chance of being right or wrong, or even has a 60-40 chance in your favor of generating successful trades, why do we cry when we have a losing trade? There's no point. There really is no point even thinking about it. It's a losing trade. Unless you make a mistake, unless you do not follow your trading strategy, tell me the point of creating a fuss about a losing trade. It is 1 within 1,000. It means nothing. 2 consecutive trades, 3 consecutive trades. If you label those out, if you write those out, just in the form of dashes on a piece of paper, over 100 trades with a 60% probability of a winning trade, you'll know, you'll see. Visually, you'll see it makes no difference as long as your risk is controlled. So another one from Mark Douglas. A typical trader wants to be right on every trade. Again, winning and losing. We do not need to be right on every single trade, guys. We do not need to be right. We could be right on 50% of our trades. We could be right on 40% of our trades and lose 60% of our trades. As long as we win more than we lose on our trades, we will generate a profitable outcome. One more. In this business, if you're good, you're right 6 times out of 10. Fantastic quote this is. You're never going to be right 9 times out of 10, which you'll see by many gurus that are. And this was from Peter Lynch. So Peter Lynch is an American investor, a mutual fund manager. And get this, he's 78 years old, I believe. This was from a Google search. He's 78 years old. Do look up Peter Lynch. He's an interesting character for sure, and well worth researching. You're very welcome, Angelo. That's no problem at all. Matt, live to trade on another day. Fantastic. I should have added that, really. Live to trade another day. Yes. So many of us do say this, right? Live to trade another day. And by succumbing to the emotions of trading, you're going to end up in a lot of trouble. Revenge trading is the big one. You're going back into the market. You're angry. You're not focusing on your strategy. There is no one here that will tell me once you enter that revenge trading mode that you are following your method to a T. If you are, I salute you. But if you're not, it's going to end bad. It's a vicious cycle, because what happens is you'll enter that next trade, and very likely it will turn out to be another losing trade. Then what happens? You increase your risk, because now you're down 2 trades. So 2 risk levels. So say you risk $200, you're now down $400. So you need to risk $400. And what happens? You're still not following your method. And look, I'm sure you can see what happens next. I'm sure you can imagine what happens next. So guys, the next webinar for FP Markets. Oh, look, Q&A, guys. If there's any questions, please do fire them across. I think I have really touched on all the questions that I've been thrown during the presentation. I really enjoy this subject. I really have tried to really separate the key points that I found that was so troubling for me. And I hope that this has helped some of you newer traders here. I hope it's really opened your eyes to the importance of how we think when we trade. It's such a huge subject, such an interesting subject, and something I would really encourage you to investigate more. So the next webinar for me is on the 25th of August, and that's trading the Dow theory. Okay, guys. So that's something I really do like. I really do like the Dow theory, something I learned during my CMT. If you have any questions or you want to, or you just want to further clarification on anything that we've touched on today, use the emails here, guys. So we have marketanalyst@fpmarkets.com or support@fpmarkets.com. Either one is fine, but the marketanalyst@fpmarkets.com is direct to the research team. Just as a reminder, a recording of this session is available through the main website. A quick search under resources will suffice, and you'll see all of the webinars there. Or head over to our YouTube account, guys. Remember to subscribe to our YouTube account, and that way you'll get all of the videos we upload. Also, we have the FP Markets Academy now up and running. A link will be in the chat box shortly. This is something you'll see me in the videos quite a lot there. This is something we've designed to help newer traders, to help them from beginner, intermediate, and advanced. We're still in the process of developing this, so it's something that's quite exciting, and it's really a chance to build your knowledge in a structured manner. Also, register for the FP Markets Telegram newsroom. We've opened a newsroom, guys, and this is on Twitter and available on Twitter and available on Telegram. Now, we are intending to ramp up the posts very shortly, and this will range from major news events, chart examples, and just to add a little bit of personality to the market news, if you will. So I see there's a few more questions coming through. Okay. All right. So there are quite a few questions. Implied volatility, next topic. That's a really good topic, Matt. That could be something. That's a really good idea. Let me write that down. That's a really good idea. Implied volatility. All right. What we'll do, I'll try and we'll try and pencil that in for the next webinars, which will be, I think, in September. Angelo, before you leave, I'd like a comment on recent levels of future index like S&P. And I haven't got the charts up, Angelo. I've only got the screen. One of my screens has actually stopped working. So I've only got two screens right now. So, and one screen's for my the slides and one's for my notes. So I don't really have an option to go onto the charts right now. I apologize for that. But look, do send me an email and I'll try and get that back to you. Can you please let me know what the last two webinars were? This is anonymous, from someone anonymous, but just go onto the go click the link in the chat box and you'll have all of the archived webinars available for you to see. Okay, so all right, Angelo, do you think the pullback over the market will continue downtrend or not? I assume you're talking about the dollar yen. What market are you talking about, Angelo? All right, so I'm just waiting for Angelo to reply. Just bear with me. I'm not quite sure. Angelo, send me an email and I will get back to you on that, the ES and the NQ, because as I said, I can't look at the charts, and I don't trade the ES or the NASDAQ. So I'll have to look at that again. But yeah, do send me an email and I will get back to you. Now, guys, on that note, thank you very much for taking the time out of your day to be with me, be with us. I've really enjoyed it. As I said, I hope you took something from it. Any questions? marketanalyst@fpmarkets.com. Have a fantastic day, guys, and I'll catch you very, very soon. Thank you very much.